Is exhaustion setting in and price breaking down? Or are market makers and whales setting up a bear trap only to accumulate and send it when 100K? If you are new to the channel, our daily updates are short format summaries of our market perspectives and trading strategies. We are a team of investment professionals leveraging our careers in traditional finance as traders, market makers, and portfolio managers for top-tier institutions, having transitioned to proprietary traders of digital assets. We have developed a methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs. Our approach translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price-volume relationships. Please note, our content is not investment advice, or is this an educational channel. It is intended for entertainment purposes only. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Daily trading ranges in excess of $5,000 are the theme this week, with Bitcoin in price discovery, as the auction process absorbs heavy two-way flows. Profit-taking and market maker predatory tactics to trigger leveraged liquidations have instigated intraday cascading price action to both the upside and downside. Despite the over 5% decline in yesterday's session, leveraged futures are still net long and open interest at record highs. Erratic price action has shaken sentiment from extreme greed to greed, as indicated by the Crypto Greed and Fear Index. Volatility markets also reflect a more cautious posture, with increased demand from buyers of downside protection via puts. The volatility, SMILE, also reflect a steeper skew between at and out of the money strikes, reflecting the large intraday price swings and higher expectations of pronounced move to both the upside and downside. Bitcoin ETFs also posted their first negative net flow in the prior 6 sessions of approximately minus 400 million. Translating that to flows, that is a reversal of nearly 1 billion versus the prior session plus 500 million inflow. Looking to market structure, local corrective price action, although substantial in notional terms, is shallow as a ratio, with less than 25% of the recent impulse having been retraced. Thus, invalidation levels to bullish market structure are not within close proximity, and a much deeper retrace or prolonged corrective range is becoming increasingly probable if impulsive price action does not resume in today's session. To the downside, our model projects high probability reaction zones or inflection points at 86, 83, and 77,000. To the upside, we view gamma exposure from the largest open interest option strike at 100,000 for December 27th expiration to function as both a magnet to price as well as resistance upon arrival, driven by gamma hedging and position squaring. Additionally, 100,000 is the strongest psychological level on the chart, making it a concentration zone for limit orders and profit-taking. However, in the event a positive catalyst creates strong momentum, and gamma hedging creates a squeeze through 100,000 with high velocity, the level could flip to a key psychological support, to which one can expect market chatter of "never again below 100K" reverberating on social media. Translating aforementioned backdrop into investment implications, our strategy remains biased to higher prices over the long term going into 2025, with our model projecting at least 165,000 with an October cycle peak. The probability distribution of outcomes, however, is skewed to the right tail, as mass adoption and imbalanced in stock to flow could result in deviations to the upside from outprojection in the scenario of a blow-off-top parabolic peak as a climax to the cycle. Rumors of nation-states' adoption of Bitcoin as a strategic reserve asset are one example of a positive catalyst which could make this scenario come to fruition. More locally, we expect price to at least wick to 100K by year-end. As a caveat, corrective price action is inevitable, and near-term downside risks to aforementioned technical levels are highly probable. In the absence of a significant negative catalyst, we would view these levels as opportunities to increase our long delta. In volatility markets, the term structure remains inverted, making for compelling implied volatility mean reverting strategies via short option structures in less than 1 month, expiries going into the weekend. Volatility risk premium in longer expiries is fair, making them less compelling for harvesting volatility premia. As always, do your own research and analysis. Be safe, and good luck in trading.